income taxes.
Tax system.
System.
Have you ever wondered, how much does billionaires pay tax? You may be unknown about it, but they pay much less than you have expected. According to report, wealthiest American pay just 3.4% income in taxes, but an average middle-class American pay 32% income in taxes. But how do they manage to avoid tax? To understand this, we will have to know about tax havens.
Tax havens.
Tax havens.
Tax havens.
Tax havens.
Countries or territories that offer favorable tax treatment to individual or business are considered as tax havens. Countries like Ireland, Luxembourg, Netherlands, Switzerland, Singapore, and Bermuda were listed as the key tax havens according to Tax Cuts and Jobs Act attribution tax data. Tax havens are often known for their low or zero tax rate, strict financial secrecy laws, and minimal financial regulations. Most of the billionaires and companies avoid high tax rates of their native country with help of tax havens country. There are a number of techniques that a person or business can avoid taxes using tax havens. And one of the popular is corporate profit shifting, where a company registers its headquarters in a tax haven country and pay low tax. For better understanding, let's assume that you have a company in country where tax rate is high, so you want to save some money. For better understanding, assume that you have a company in country where tax rate is very high and you want to save some money by help of tax haven. First, you have to consult with legal and financial professionals who specialize in international tax laws and offshore business structure. Now, with the help of such type of professionals, you can now register your country branch in country B and publish it as headquarter of the company, where tax rate is low. And by shifting headquarter, you will have to pay tax in low rate, but this cannot be done with any country in the world. To do this, your native country should have signed a double tax agreement with the tax haven country. DTA is a contract signed by two countries to avoid or alleviate territorial double taxation of the same income by the two countries. While doing this, your personal information are kept secret, and the branch or the headquarter registered in tax havens company are not necessarily to be billed. They are registered paper only, which makes so easy for business to register company branch. In such countries, you can find thousands of headquarters of company in a single building. For individuals, it is done using trust, where the assets like cash, real estate, or investments are transferred trust, where they are managed by the trustees. Trustees are responsible for the assets. These trustees manage the assets to provide benefit for the beneficiary. Beneficiary is a person who is the owner of the assets. In October 2021, the International Consortium of Investigative Journalists, ICJ, released the Pandora Papers to the media and general public. It is considered as greatest ever leak of tax haven financial information. The Pandora Paper consists of nearly 12 million files, filing almost 3 terabytes of data. The Pandora Papers uncover a complex web of tax havens, shell companies, and offshore accounts that hide the true ownership of billions of dollars of assets, where more than 100 billionaires, 29,000 offshore accounts, 30 current and former leaders, and 336 politicians were named in the list. Many individuals identified in Pandora Papers were found to have used offshore companies, trusts, and other financial structures to hold their assets and conduct transactions. Some famous names revealed in Pandora Papers: former British Prime Minister Tony Blair and his wife Cherie Blair were mentioned in connection with property investments in the UK. The papers suggested that they used offshore companies to purchase property. King Abdullah Ayub Jordan used offshore companies to buy luxury properties in the United Kingdom. And names like Poroshenko, a former president of Ukraine, the former prime minister and billionaire businessman of Georgia, and many more in the list. Attracting foreign investment is the main reason for a country to become tax haven. By offering zero tax or low tax rate, a country can attract impressive number of foreign investment and conduct financial activities in the country, and can become a hub for international business and finance. And by becoming a hub for international business and finance, it can create job opportunities for the people. This can help in huge economic growth of the country. When an individual or business shifts their profits and assets to tax havens, it reduces the tax base in their native country, which leads to the significant loss of revenue for the country and leads to slow development of the infrastructure of the country. For example, in 2016, the European Commission ordered Apple to repay £13 billion in unpaid tax to Ireland, as the company had taken advantage of Ireland's low corporate tax rate. Through the decision is still being contested as of November 2023. Income inequality. The use of tax havens can exacerbate income inequality. The wealthy and corporations armed with sophisticated tax planning can minimize their tax, which leads to disproportionate burden on middle and lower income individuals who lack the means to engage in sophisticated tax planning. As we unravel the complexities of tax havens, it is important to note that the use of tax havens is not illegal. Share this video to spark conversations, comment with your thoughts, and don't forget to subscribe to the channel.